Hey soldiers, the US dollar is accelerating toward losing reserve currency status. And you need to understand how to invest and how to position yourself when, not if, this is happening. So when this happens, when what happens exactly. We're going to get into that, and we're going to also talk to you about the assets that you need to take a look at to insulate you and keep you on that road to financial independence, even in a situation where the dollar loses its reserve currency status.
Ain't nobody got time for that.
Okay, let's not bury the lead. Let's go ahead and put a chart up. And this chart shows you the dollar's role in central bank reserves. Now, it has declined, and we're just looking at from 2016. From 2016 to 2022, today, we've gone from 65% of the world's reserves. The dollar has gone from 65% of the world's reserves to 59%. Now, I'm always on here telling you that I believe that we will lose reserve currency status. The dollar will lose that hegemony by the mid-2030s, 2035. Now, if we've lost all of this ground, we've gone from 65% of the reserve holdings to 59 in 7 years, do you really think that it's going to take us, and do you really suppose that we're not going to slip under 50% by 2025, especially when you consider the fact that the dollar has been weaponized and a lot of countries just are not feeling that. They do not want to be controlled by the U.S. We've talked about that before, and they've seen where they can have their reserves seized. They can have their economic power challenged because the U.S. has the might to do that, because the dollar by far is the world's most wanted currency, even at 59% of the reserves. That's the situation that exists right now. Let's take a look at this article from the Financial Times. Central banks look to China's renminbi to diversify foreign currency reserves. The dollar's dominance could gradually decline as a result of geopolitical flare-ups, UBS survey shows. And I got a little problem with them saying could decline. We've seen the chart. It already has started that descent. Central banks are looking towards the renminbi to diversify their foreign currency holdings in a sign that geopolitical flare-ups could chip away at the dollar's dominance. The proportion of central bank reserve managers that have invested in or are interested in investing in the renminbi increased from 81% last year to 85% this year, according to an annual survey by UBS of 30 leading central banks conducted between April and June of 2022. It goes on to say, we're seeing a gradual erosion of the dollar. The person who is quoted as saying this is Massimiliano Castelli, head of strategy for global sovereign markets at UBS. He goes on to say the picture that emerges is one of a multipolar currency system, which means that this bank, UBS, they took the survey, and that data has shown them that what we can expect is for there to be various currencies that the world takes a look at to hold reserves in. And they do that now to a large extent. The euro is out there. But we're going to get some more players that rise to prominence on that list of currencies that the world relies on to trade in. The rising interest in China's currency comes after Western powers froze about $300 billion of Russia's foreign currency reserves in response to Moscow's invasion of Ukraine in early 2022. While the move is seen by the majority of manager surveys as a one-off event, they're saying that they actually see the United States making this type of move as a one-off event. And I think they're saying that because can we pull that with China? Could we do that? We are so heavily reliant on China that I don't think that we would pull that same card with them. So these bank managers, I think they get the same kind of impression. They go on, while the move is seen by the majority of managers surveyed as a one-off event, it pits those Western powers against Russia and complicates relations with countries not joining in sanctions, which include China. This accelerates a split between China and the U.S. that had already begun during the Trump administration's trade war. So we already took a look at that chart. They say that inflation, of course, is a major concern. Our debt is also a major concern, in addition to the fact that, as we spoke before, they weaponized the dollar. Now, another development along these lines, China and Russia want to replace the U.S. dollar with Brics currencies. Brics is an acronym, stands for Brazil, Russia, India, China, and South Africa. It's a group of nations that are engaged in economic cooperation. Brics members call for cross-border payment in Brics currencies to challenge the U.S. dollar. The Brics, I told you what the acronym stands for. They had a meeting here not too long ago, June, and it was chaired by the Chinese leader, Xi Jinping. And Mr. Jinping, or Premier Jinping, or however he is referred to, basically said we should also expand Brics cooperation on cross-border payment and credit rating to facilitate trade, investment, and financing among our countries. So you know who's not included in that? The U.S. They're circumventing a lot of our economic power, again, because in addition to seizing the reserves of Russia, we also cut them out of what's called the SWIFT system, which is basically a global financial messaging system used by these large financial institutions and governments. Chinese Foreign Minister Wang Yi presented the GDI, and the GDI is an acronym, stands for Global Development Initiative, presented that to the United Nations in April of 2022 as a Chinese Communist Party-led Global Development Initiative. It was welcomed by the UN and has received messages of support from 100 nations. The group of friends of the GNI was established on the UN platform. So far, more than 50 countries have joined, ostensibly utilizing a China-led non-dollar payment system would help facilitate the development of what the Chinese Communist Party is calling for. So there's some threats out there to the dollar. Now, is this going to happen tomorrow? Absolutely not. Will countries still hold their reserves, some of their reserves in dollars? Yes, we will continue to see that probably for the remainder of our lifetime. However, that percentage is not going to be as high as it is today. So you've got to ask yourself, in that type of situation, what is my investment portfolio, or how does that begin to look? Let me first say that when we start to decline further in terms of the amount of countries that hold the dollar in reserve, we're not going to be able to have as big of a credit card balance that we can run up. We're way over the limit anyway as a country. Each taxpayer is responsible for about $224,000 of our $30 trillion, over $30 trillion national debt. And we talked about ways that you can legally insulate yourself from having to come up with all that money and take that away from what you're doing, what you're earning, and what you're putting away to work for you. We talked about ways to do that. I'll talk about one in a moment. But when we talk about things that the United States will no longer be able to do when we start to decline further in reserve status for the dollar, we won't be able to have these protracted military engagements, okay? Right now, the United States does look quite like an empire when you look at how far flung we are with military bases and various military engagements. That's being run up on the credit card. Another thing that you will find is local services will start to be impacted. Now, why is that? Because the federal government will not be able to spend as lavishly on states, and then states therefore will not have money trickle down. Baltimore City just got a grant, something to do with immigrants, and that kind of thing. You're not going to see that, okay, as the dollar starts to lose prominence. Now, what you will see is the federal government and state government start to raise taxes, because they're going to have to get the money from somewhere. They're going to go through a phase where they're going to turn inward and say, well, American taxpayer, we're just going to get the money from you. And that's going to, of course, take more money out of your pocket. They're talking about inflation might settle one day around 5%, which is a far cry from the 2.2 to 3% that it ran at headline inflation for quite some time. So you need to really look at, the first thing we're going to look at here is ways to get out of that taxation situation. I talk about it all the time. You can take a look at an IRA, Roth IRA, make that clear. Roth IRA is set up such that it is after-tax money, it can grow tax-free. But it does have some stipulations on it, and those stipulations include a limit on what you can contribute, which is relatively low, okay? I'm not going to put the limit out there because I want this video to be evergreen. So I want you to, whatever year you encounter this in, I want you to figure out what that limit is. It's a Google search. It's not that difficult. So that's one way you can shield some money from it. Now, another way, of course, is the permanent, properly structured insurance policy that will allow you to put a lot more money away. That money is going to grow tax-free, unencumbered, under IRS Rule 72E. You're going to be able to get your hands on the money without having to be 59 and a half, without having to explain, well, I got a hardship or anything like that. You'll be able to get your hands on the money under Rule 7702 without tax implication, and then you'll be able to create generational wealth that can help your family, those organizations that you care about, and they will be able to receive that money tax-free under IRS Rule 101A. So that's one way to do it. Another thing that you need to consider when you are trying to look at the situation of the dollar losing its hegemony, real estate. Okay, real estate tends to, when you have a demand, any demand surge for goods and services, the sustained surge in consumer spending could be a trigger which causes high inflation, which is what we're experiencing right now. So if we see more inflation acceleration, then as we have seen, we get also inflation in rents, be they commercial or be they residential. We looked at that on a video we did the other day about how rents have steadily gone up. Rent inflation is something that you cannot avoid if you are leasing office space or if you are leasing a place to live. Now, of course, if you go get a 30-year mortgage and you lock in, of course, to a large extent, your payment is not going to change unless your tax situation changes or unless you go out there and do something with your loan, like take equity out and become responsible for a higher amount. But barring those things, a 30-year mortgage will remain stable. Now, the reason I'm saying that is because if you go out there and you purchase a property to rent, or you purchase, a property to rent to a residential situation or commercial, you will realize stability in what you are expending. Your expenses will be relatively stable while you can continue to raise rents. Now, another way to take advantage of this without going out and getting a mortgage is what's called a real estate investment trust, or a REIT. A REIT is basically a real estate investment trust. It's a company that owns and in most cases operates income-producing real estate. And they own many different types of real estate. So you can find apartments that families live in. You can find data center REITs. Okay, you can find agricultural-based REITs. You can find all kinds of REITs. And this is a way to get in on real estate without necessarily having to come out of pocket with a larger amount of money for a down payment or having to secure a mortgage loan. Now, of course, with a REIT, there are certain things that you won't be able to take advantage of, like, leveraging, because when you get a real estate loan, you're able to leverage. If I want to go out and buy a $100,000 piece of property, I'll be able to control that for about $20,000. And I'll be able to take advantage of all of the rights and privileges that come along if I owned it outright. like being able to rent it out, being able to take equity out of it, and so forth, being able to get the tax advantages off of that real estate. All right, another asset that we talk about on the channel quite often are commodities. Okay, to the extent commodities will continue to be used, and they will, we've got to power this planet somehow. So oil, coal continue to play a role. In fact, we did the video the other day talking about what Warren Buffett was buying. Just bought more. He just upped his stake in Occidental Petroleum to 16%. He doesn't think that we're going to be stopping using oil anytime soon, okay, based on that move. Another commodity out there is gold. Now, a lot of the central banks purchase gold. And the reason for that is because it insulates from inflation. It's a good hedge against inflation. It has been for over 2,000 years now. So as we went over how inflation will go up in this scenario. As we realize increases in inflation, there may be a certain percentage of your portfolio that would be stabilized in that fashion if it were held in gold. Now, let me say this. I am not an advocate for me personally. I'm not giving you advice. I'm just telling you what I believe. I'm not an advocate for paper gold. What is paper gold? Paper gold is when you buy shares somehow in something that is supposedly backed by gold. Okay. If you can't verify that, if you can't put your hands on it, you don't own it. Now, you may say, hey, what about a gold mining company? Well, look at the fundamentals. Are they mining anything else? If the fundamentals are good, it might be something that you can move forward with. But that company is something that's tangible. They have equipment that you can see. They have leases on mines and whatnot. They are pulling something up out of the ground. That's not the case with paper gold. So be very careful when you are considering how to invest in a commodity like gold. So those are some of the ways. Now, the last one is one that, you may or may not consider. But if you are someone who's very patriotic, this one may get under your skin a little bit. But look, we're going where we're going. It's happening. It's not slowing down. It's accelerating. Buy assets backed by more stable and fiscally responsible countries. Any U.S. dollar denominated asset, such as pensions, stocks, annuities, and bonds, will be directly affected by a weaker dollar and higher inflation. So the world's strongest currency against the U.S. dollar is actually the Kuwaiti Dinar. Yeah, that's right. The exchange rate is somewhere around one Kuwaiti Dinar to $3.28, somewhere in there. Now, again, depending on when you're watching this, that could fluctuate. You got to check it out for yourself. And before you do anything with respect to foreign currencies, you really have to check with your investment advisor, a professional, your CPA. I'm just telling you some of the ways that will help cushion the fall when we come off of this reserve currency status, which I again believe will be in the mid-2030s. And it's not that far away. Okay, I would imagine, I look at the stats and the demographics of this channel, and most of the people watching this channel will still be relatively young when 2035 happens. Okay. As the United States global trading partners continue to scrutinize the fiscal policies of America, the U.S. dollar continues its decline in purchasing power and overall appeal as a safe haven in times of a crisis. The debasing of the U.S. dollar domino effect will continue to erode the confidence of international investments. So, I hope you heed those words. Act accordingly. Do what you believe is in your own best interest based on what is happening. Do not hide your head in the sand. That is a formula for disaster. I want to mention that we do have an email list. You can go to our website, mcenow.com, and you can put in your email address. We've got a newsletter that we send out. The newsletter goes out once a month or more frequently if there's a need. We recently covered the reason why the federal government changed its definition of inflation. We walked through that in our latest newsletter. These are things you need to know. You need to be fully informed so that you can keep your money working for you despite all of these things that are occurring, all of these challenges that are occurring in the global economy. You want to change these challenges into opportunities. Okay, the global economy is going to leave a lot of people behind as it continues to evolve. Watch this video right there. This video is going to tell you everything you need to know about what you need to do to recognize how this economy is changing and what you need to do to avoid being on the wrong side of it.